Welcome back to my channel. Today we'll be talking about how to begin your investment journey as a beginner. How to begin your investment journey as a beginner. And this video also will help those that are into investment already, but it could just ignite your understanding, refresh your memory on some things you have been doing or you've ignored, or something you should be doing as pertaining to your investment journey. My name is Daramola. I talk finance, business, and investment. So, without wasting much time, let's move to what we have in details. So, we want to talk about investment. So, it's polite and it's good. We know what investment is. It's very important that we know what exactly investment is. And investment is simply the ability to sow a seed. This is my definition. And by the way, I'm not using this as an advice for you to make your investment decision. This is just to kind of give you a basic understanding, and you should do well to make your research before you take any step from this foundational knowledge. So, what is investment? Investment is simply the ability to sow a seed with the expectation of getting a good harvest or getting an harvest from it, getting a good harvest or getting an harvest from it. This seed sowing must be done with proper understanding of your why. So it means that you sowed a seed, which is this, you sowed a seed, you have an expectation of getting a good harvest. These are your reasons of getting a good harvest, and this must be done with a proper understanding. This is very important. A proper understanding of your why. So, for instance, a farmer wants to plant a seed, and so he said, "This is the raining season, the soil is good, and the weather forecast is good, the predictions of rainfall is very good. So I think this will be a very good year. The soil is also very good, it's a fertile soil. My seedlings are very good. So I have the expectation that my farm produce will be very abundant this year. That's because I have these reasons backing my seed sowing decision making. So this is exactly what we're trying to bring out, that you must have a why before you make an investment decision. And this why is very important because this will serve as the guide for you when making your investment decision. To serve as a guide for you when making investment decision. So what are the types of investment we have? What are the various types of investments? What are the various types of investment we have? And like I said, what are the various types of investment we have? But before that, we also need to have an understanding of the reasons why we are making those investments. So we have various types of investment, but in each of those type of investments, you must have your why, you must have your reason why you are investing in them. And this is what we'll actually be talking about in this slide. So, what are the basic why for your investment decision? What are the basic why backing the reason why you're making your investment? Number one is we have many reasons. Obviously, we have many reasons, but this is some of the key reasons we have when we make our investment decision. So, this is a fundamental why. I invested in this business or I invested in this asset just because of these fundamental reasons. So fundamental why or accounting why. In terms of the business have a good financial statement. They're making profits. They're making profits in year one, year two, year three, year four. They have been always making profits. So this business is a good business. They're making positive profits. So I think it's a very good business. Accounting wise, it's a very good business. So you must understand if a basic understanding of accounting if you want to make those kind of investments. You must have basic understanding of accounting. What is their sales? What is their revenue? What is their net profits? What is their operating income? What is the balance sheet saying? What is the cash flow saying? You must have an understanding. What is the return on investment? what is what is the returns you get on your shares, what is the returns you get on dividends. You must understand what are the management of the business doing with your money. You must have those understanding. I mean, those are the fundamental why. So once you settle this fundamental why, then you can be able to make that investment decision. And sometimes your fundamental why can be in combination with other whys. So it's not just you picking why. I mean, fundamental why. You can also combine other whys to make your investment decision. So the next we have political and economic why. Political, we've talked about fundamental why. Now, political and economic why. So, for instance, a particular president is coming is has won the election and he will soon be sworn into his seat to begin his tenure. And you know that this governor has a lot of wonderful policies in mind, things he wants to do. He has good policies, things he wants to do. He understands business, he understands finance. So those are the things you're looking at, and wow, wow, you're so proud of this president. And I think the market will do well under his tenure. And so you decide to make investment decision based on this political why. Economic why can also be interest rates, inflation, unemployment. Now, why I'm saying this is because I'm just giving a fundamental, and I'll be giving a lot about this stuff in this channel. So, this is why, if you have not subscribed, I want you to subscribe. We have a target of reaching 100. If you haven't subscribed, please, I want you to subscribe. I also want you to click on the bell notification so you can be the first to receive this video. As long as you're interested in investment, finance, and business, you are in the right place. I will make sure my videos is as short as possible but contains what you need to make a right investment decision. Okay, so economic reason, interest rate, inflation, unemployment. Um, let's, for instance, not only economic reason, we could have disaster, natural disaster like the COVID-19. A lot of people were actually doing what I call short selling in terms of they knew the market has failed. But when vaccines started coming, the market started picking shape. Market fell down. Then with the discovery of the vaccine, economic activity started taking place. So a lot of people started making money. So a lot of people were investing at these positions, and now their asset value has actually risen. So these are one of the importance of making investment decision with your why. Okay, so the next point is going to be technical why. Now, when for instance there are investments where you need to read charts, so you can look at the chart and say, based on this chart, I think the market want to resume back its previous momentum. So in investment, for instance, you're looking at the chart. The chart has something we call um, impulsive move, and there's something we call corrective move. So the market is actually going up. So this is an impulsive move. Then it comes down. This is a corrective move. Then it goes back up. This is an impulsive move. Then it comes down. This is a corrective move. So at these positions, there are certain investments where you will want to make your investment decision. Wow, I think this market is about to resume its present. I mean, it's about to resume its current position. So its current direction is upward, but the market does have a little correction. So the market is about to resume back to its original movement or its original trend, and that's when some people started making their buys here to move along as the chart is actually going upwards or northwards as it may be. Okay, so we have trend Y. When we talk about trend Y can be in different direction. It can be from the accounting trend. I mean, accounting trend, we talked about year one, year two, year three, they've actually been making profits. So this is a positive trend. You understand me? And you can also talk about trend in form of there's something that is particularly booming in their industry. There's something that is booming in the industry. I think that's actually where the world is going to. So that's a trend. So you decide to invest quickly in that trend. So a lot of people are very skeptical when new trend happens. So this is why you make your investment why. So once you put in your research and done your wise, and you say, wow, this is actually a new industry, and I think it has a projection of trending for the next 5, 10, 15 years. So you are part of them that actually bought that investment when it was actually low. Then it's now going up. So some people could be unfortunate that they came in here, and market actually sometimes goes down. So they will be making losses. And if they can't hold their psychology enough, they might end up closing, then the market moves back up and they decide to enter again and the market moves down. So this is how, although we're going to talk about psychology very soon, but this is exactly how some people get caught in the web in terms of investment. So you should make your why and stick to your why. So another reason is personal bias. You could love products that you use at home. You could love the chocolate bars, the sweets you take. So you love that company, you believe in the brand, and so you decide to buy into the investment of that company. So that could be your personal why. So we have recommendation why in terms of investment expertise. So some people can give an advice with credibility. I mean, is that a fund manager or investment advisor or anyone you have that you believe has credible results, then he gives a recommendation. Then you decide to invest in his or her recommendation. Now we have diversified why or less risky why. Yeah, some people make investment decision based on that. I think this investment is diversified. It's a combination of several things. So we can get the average out of that combination. For instance, instead of buying, let's say this is a triangle, a triangle, a triangle. So we have triangle 1, triangle 2, triangle 3, triangle 4, triangle 5, and triangle 6. 4, 5, and 6. So we have 4, 5, and 6. So you can decide to buy triangle 1 with the expectation that the value will be times 2. And unfortunately, the value was negative. You understand me? So this could be positive, this could be positive times 5, this could be positive times 10, this could be negative minus 5, this could be even static. So when you invest in a diversified portfolio like that, you're getting the average of this whole thing. That's exactly what we mean by that. A diversified portfolio, a diversified investment, and that kind of investment is usually less riskier. Okay, so the final reason, obviously, there are other types of reasons, there are several types of reasons why you make your investment decision. It's based on the return on investment. I want to invest in something that is going to give me 10% and above. Anything less, I'm not interested in it. So that could be your why. So whatever investment does not give you that 10%, you decide not to invest in it. And if you're able to make this kind of investment decision, I believe it's going to help you in terms of making proper investment decision, which is going to be a benefit in your investment journey. Now we want to talk about something different, which is going to be your different types of investment that we have, the various kinds of investment that we have. So what are the different or the various types of investment you can make? We have several of them, so I'm just mentioning only a few, but we have many kinds of investment that you can invest in. And the first among the list is cryptocurrency. You should make your research about all this stuff. In subsequent video, I'll be speaking on them. So please endeavor to subscribe and click on the notification bell and ask your question if at all you don't get anything, or if you want me to talk about anything. I'm also going to make a video about that as soon as I have the time to do so, because we are here to help and there's no charges. All the stuff here is for free. Cryptocurrency. Now, I talk about trend, so it's something trending. So cryptocurrency could be an investment for you. I have investment in cryptocurrency and they perform well. Initially, they performed bad, like some months back, but actually things are moving back up again. So shares, you can buy shares of companies that you love based on your why. You can buy the shares. You can buy bonds. Now, what is bonds? Let me just explain this for you because government raise bonds, companies raise bonds. We have private bonds. We have, corporate bonds. We also have government bonds. So government can decide to raise money and they decide to use bonds. So in terms of instead of them selling their shares, because when they sell shares, they are selling it out, they're selling their ownership out to the public. But bonds, they're not selling their ownership. They're taking your money with the expectation of paying you back your money with an interest. That's how it works. So we have 5 years bond, we have 10 years, 15 years, 30 years bond, as you may be. So do make that research. Index fund, I give an example of diversified portfolio that's similar to what an index fund is. So talk about cryptocurrency, shares, bond, index fund, real estate investment trust. You can buy a real estate investment trust. If at all you don't want to invest in real estate, you can buy the shares of a company that invests in real estate. You can also be involved in a fund. I think I'll just move down there to a fund. There can be a fund that is raised for the purpose of investing in real estate. There can be a fund that is for the purpose of investing in stock market, for the purpose of investing, trading. You can trade stock, shares of companies, you can trade currency, you can trade cryptocurrency, you can trade commodities, and all of you. So you have that funds. Then another point is private business. Yeah, you can invest in private business as long as you understand the accounting, the fundamental of that business, and your bias about the business. Those can be uh, investment opportunity, real estate investment, mutual funds. Mutual funds, on a summary note, it's just like we combine funds from people and we invest in different investment class. It's done by a mutual fund manager. Then we also have funds that we've explained. Then commodity, you can invest in gold, silver coins, gold bars, and all of that. And as the value appreciates, your value of your commodities also appreciating. And that's will be all for this aspect. Now, I want you to understand that these are just my recommendation. There are different kind of investments you can actually invest in, but it's very important that you understand your why behind your investment. That is very, very important because that's what will help you to make proper investment decision as you journey in your investment world. So, what's the difference between investment and gambling? Like what I said here is very powerful, which I want you to know. When you make an investment decision without a reasonable why, it's called gambling. You make an investment decision without a reasonable why, that's called gambling. In fact, it might work well, but that's called gambling. You just risk, but it ended up working well. But most time might end up not working fine. That's why a lot of people fall into Ponzi scheme, and it's very dangerous because those guys have taken a lot of money. As a matter of fact, I've fallen into Ponzi scheme not once. Twice, I guess. I fall into that, but that's because of my greed. But you should be very careful so you don't fall into Ponzi schemes, gambling decisions. The opposite of gambling is called investment. So you invested because you have reasons, and these reasons are reasonable. It's also possible for you to have reasonable reasons and your investments still go wrong, but it happens because you might not be 100% perfect. So sometimes you make wrong decisions. But still, based on the fact that you're working under emotion psychology, so you may be tempted to give into an investment when your analysis was actually showing you not to invest in it. Okay, so the next point is investment and trading. Trading is like a game where you buy and sell financial assets. So you can make profits when the market moves in your direction. I mean, when you want to buy and the market is moving up, you're making profit. You sold and the market is selling, you're making profit. So you can make profit in trading in either direction. Just make sure you do your analysis and you're sure that the market is going to your direction, then you'll be profitable. So it's an analyzed direction. You don't just gamble, buy, sell. You make your analysis and I've talked about trading in this channel. I give a full course on how to start trading the currency market. So you can do well to watch it. That will be of help to you. Um, I also want you to understand that investment is different from trading. Investment most of the time is a long time projection, and your expectation is that the market moves up. That's your expectation, that the market should always move up to your direction. So you just want the market to move up. But in trading, you can actually sell. You decided to sell here and you're in profit. You decided to buy here and you profit. So that's just for investment and for trading. Those are the difference. So some people mix it up. When they're trading, they say they're investing. When they're investing, they say they're trading. I want you to get this cleared now that investment is different from trading. So you don't fall into that web of thinking that way. And finally, conclusion is handling psychology. And I talk a little about that when we started this video. Once you've made your investment decision, you've made your decision, you've gotten your why, you've gotten your why. I want you to stick to it. I want you to stick to it. Markets move up and move down. A lot of people are in play with the market, so different psychologists making the market to move up, moving in different direction. Different psychology is making the market to move. So, for instance, if you bought here, the market have actually gone down, came down, went up, came down. It came to this direction. It came down, then it moved up, it moved up. It came down, now it's going up. So you should not, as long as you have a projection, you have a target, and these targets still are being played. I mean, these targets are kept, they are still followed, they have not been broken in the market. You should stick to your investment decision. Only when these projections start changing, you expected this to happen, but it's no longer happening. A governor was impeached or something happened, then you decide, wow, I think the reason why I made this investment decision has started changing. So I need to make adjustment to my investment. That's when you do that. But this is the whole play about psychology. Stick to your investment decision. It's not going to be easy. Yes, sometimes you may make mistake. I don't take that with that, but on consistently, you start getting your mind strong so you can be able to make proper investment decision. Finally, take action. Please take action with this stuff. And in no time, you're going to be making good returns. And research before you make your investment decision. Please, you can drop down your comments and I'll respond to them shortly. Thank you very much. See you next week. Bye for now. Cheers, guys.